we see the tweets that come out in the social medias, a dividend payment of, R1.20, and then someone's mocking it. Nonsense. That is a dividend payment. That is your share of the profits. And it's something to be proud of and to take cognizance of and say, I did this and I can carry on doing it.
Hello and a warm welcome to yet another episode of the JSE Investor Avenue podcast series with myself, Gugulethu Mfuphi. I'm rather excited for this particular conversation because if you've joined us on our journey so far with the JSE, you'd be well aware that we've been covering a plethora of topics. Everything from understanding exchange-traded funds, how the JSE prioritizes investment groups like stokvels to ensure that they actively participate, but also taking a look at their private placements. And fundamentally, what we drive here is an educational process, making sure that you and I, day by day, through sharing these conversations and actively engaging on the platform, we get to better understand the world of investments and the wide scope of areas that it covers. Today, I'm rather excited because this time around, I have a peculiar question to ask you. When was the first time you heard about investing? And maybe even started investing? Well, I ask you this because for many of us, it probably happens well into our adult life. But if we do better, we could be teaching our children these themes. So today, I'm joined by someone who has a wealth of knowledge when it comes to highlighting investor education, is a super smart investor who perhaps graduated from the School of Hard Knocks in fully helping us all simplify the key concepts of dividend yields, investment potential, and even net asset value when it comes to certain stocks. The founder of Just One Lap, a key platform that helps to educate and inform majority of investors in South Africa and the world over on simplified processes to gain access to the market. Simon Brown, a good friend of the JSE, and I guess a good friend of mine as well, because I feel like I talk to you every other day, right, Simon?
Gugu, absolutely. My pleasure to be here. This is going to be fun.
It is going to be fun. And funny, when I reflected on the very first time that I started speaking to you, Simon, it's rather early on in my career, well over a decade ago. And I recall you had taught me about a particular company at the time called Famous Brands and just how to understand its complexities better. And this made me reflect and realize that, hold on, the better you understand a business, if you have a background of financial literacy, this opens up so much more in your world when it comes to the realm of investments. I highlight this because that's the theme we're talking about today. Financial literacy and just a better understanding of the world of investments. This is a passion point for you. You drive a lot of education seminars. Help us understand and remind us once again why this plays such a critical role in being a great shift in society.
It really does. I mean, we have to learn about financial literacy. We need to understand around investing. It is not rocket science, but from the outside, it seems like rocket science. But the fundamental differences it can make for human beings, and not necessarily that it's going to make us as rich as Patrice Motsepe or Warren Buffett. That would be lovely, but that's not even the goal. It's just sort of being in control of your finances, understanding things like debt, understanding good debt versus bad debt, understanding savings versus investing, understanding the power of time, and that the more time you have, the easier it is to create that wealth, to make sure that when you get to retirement, you've got enough for retirement so that you're not either relying on the state or family or something like that. And, again, it's not to say that we must all scrimp and have no fun. It's not to say that we need to, it's all hardship and saving, but that power of knowledge, and it is. And I always talk around, the old sort of cliche is that knowledge is power, and it is. But the true power of knowledge is in the sharing, which is how I ended up here, because I discovered fairly young that I knew stuff which was kind of second nature to me, thanks to a grandfather who had got me interested. To your question, when did I first hear about the markets? I must have been standard 6, maybe 7, which is grade 8 or 9 now, and that was my grandfather. Wow. He had two weaknesses. He would make money in the stock market, and then he would lose it at the race course.
Oh, wow.
That was his week. I was so fortunate to have had that knowledge and to have someone who could sort of guide me. And I was older before I realized that it was more unique than I thought.
Yeah. And maybe let's venture into that, right? Because you were young when you first heard about investing as well as the stock market, and perhaps using that as a base and as an example, the kind of influence that it does play in how young people can then journey upon their life.
Absolutely. And, and certainly, Marcus wasn't I wanted to be a financial journalist. That didn't work out. I had a couple of other jobs, etc. Until
look at you now. You've kind of ticked all the boxes all around there.
I got back into it, and now ultimately I'm a financial journalist. It has been that full circle. I love numbers, and I know, and a lot of people are like, "Oh, I don't love numbers. Please. You don't need to be a chartered accountant. You don't need to be an accountant. You don't need to love numbers. Your example of famous brands, and there's many out there where we can, as just normal people sitting in our homes, can understand a business and how it works. And in some cases, let's stay with famous brands a minute, there's nuances in that they own the brands, and then they also own the supply chain.
And that's the point, right? You actually got me to understand how interacting, like whether I buy a pizza or a burger and chips or a cappuccino and a croissant, there's a whole system in the background that actually works and is part of the business operation. So really making it relatable. And this is something that young people and anyone really can actually absorb in terms of understanding investments.
Absolutely. And when you go to one of your local famous brands, I've got many of them, you realize it's not just you who likes pizza or fish and chips or whatever it might be. And you see the cues, and it starts turning things in your head, and you start thinking, hey, hang on, and there's more cues here than there. And suddenly you realize you're thinking like an investor. And we haven't even talked profit or operating margins or anything. We're just talking the hard practicalities of what these businesses are. Now, some of them are more abstract. A mining company is more abstract. A tech company might be more abstract. But many of them touch us in our daily lives, repeatedly, and we are perfectly well positioned to understand that business and to think to ourselves, hey, hang on a second, I can own a slice of it.
Exactly. I love that you've mentioned that, because I found that that's how I've become a lot more curious when I look at trucks that are driving on the road. Like, which logistics company is that? What are they supplying? Who's actually extending this road? Is there a particular construction company that might be involved? Even looking at, the tenants in a shopping center, and you're like, okay, now I see the structure and the dynamics that exist here. And many people might actually raise a key question to ask, why is it that we miss the opportunity to educate specifically younger people about finance and investments and overall financial literacy, primarily when it comes to the school-going age?
I think, Gugu, there are a lot of challenges. I don't think that they're unique to South Africa. I think they're challenges the world over. My first trick is that we learn as children, we're learning one of three ways. We're interacting with our friends. With respect, your friends aren't going to help. You're learning from your parents, and our parents weren't taught. I mean, no one taught our parents. And then I say, well, the responsibility then sits with the education system. And I think it certainly has a part to play. But I think as well, our education system in South Africa and in other parts of the world is just under so much pressure that they're not getting the message out there. But again, who's going to teach it? The teachers haven't been taught. And then I take it right up the ladder to good old fashioned, sort of money 101 for individuals, which is spend less than you earn. And you know what? Governments don't do that. So where are our role models? Where is this concept of something sort of flowing through society, from the top down to the bottom?
Right.
And it just fails to exist. And I think there is opportunity. I have spoken at many schools over the last close on 20 years, at times associated with the Schools Challenge, at times just invitations.
Yeah.
And there is hunger. There is hunger for the knowledge. Of that, there is no doubt. But it's creating a curriculum that is relevant, that is teachable by the teachers, that has the knowledge behind it.
Yeah.
And I do think, there are some great subjects there. My niece and nephew are both in high school, and some of their subjects look like, frankly, a whole bunch of fun. But I think there's some, I think, and whether it's financial literacy, and my niece is doing some, and it's not a bad course. She's going to a private school. I think there's more opportunity for what could be part of that process and part of that curriculum.
Got you. And that actually speaks to some of the work that you do currently as Just One Lap, the webinars, the podcasts as well, even on social media, where you help us all understand in a very synthesized manner some of the dynamics that are unfolding on the markets. I also happen to speak to you quite often when it comes to my journalistic role, and also probing your mind on simplifying some of these key concepts. And I'm keen to get your thoughts on perhaps how financial literacy has evolved in South Africa. Are financial services institutions doing enough? Do we find that there is sufficient information out there for individuals to trust as well? Because let's also be fair, there's some scammers out there that try their luck from time to time.
There is a lot more than there has been. I do think, I think we can say confidently that every year there is more information. And if I go back a decade, 2 decades, if I go back to the 90s or the 80s when I was at school, when I was at school in the 80s, wasn't that there wasn't education, there wasn't information. You couldn't access the internet. It was frankly, a closed boys club. And so that opening up has absolutely happened. And that's happened over the last 10 or 20 years. In terms of the knowledge with it, it's there. It's the leading the horse to water. I get people often, they say, it might be their parents, it might be a sibling, it might be a friend. How do I get them to be smarter with their money? How do I get them to have a tax-free account, or whatever it might be? And you can't. You actually can't. What you need to do, and it's what I've always tried to do, is make it sort of known to your broader sort of social group, your place of worship, your place of work, your place of entertainment, that if they've got questions, maybe you can help. Or maybe you can point them in the right direction.
Gotcha.
Because the information is there. The problem is what are we talking here? We're talking investing, and we'll park the savings aside, but savings is an important part. We're talking investing, which, we're talking time. And we're not talking this weekend or this month or even this year.
You need to be really patient.
We're talking decades. So I say to you, I can make you rich. You put aside 15% or 10% of your salary, and you come back in 40 years, and at 40 years, people are like, hey, 40 years. And then they go onto Facebook or some social media and they get promised wealth by the weekend. They can download a gambling app and maybe, although statistically not, strike it lucky. You're fighting against something which is, they're no sure things, but a long-term investment strategy of discipline and time will create wealth. Again, maybe not a Patrice Motsepe, it will create wealth. The other options are a dodgy person on a social media or a gambling app. It might, but the odds are very, very small. But it's that we're a society that is in a hurry. And I don't think that's new. I think every society was in a hurry.
True.
It's just we hurried differently. Once upon a time, a horse was fast.
Yes.
We're in a hurry. We're in a hurry to achieve, to succeed, to impress, to be rich.
Yeah. I'm so intrigued that you mentioned that point, because I think it's so critical, especially for us as investors, to understand that it really is a long-term journey. And everyone's probably potentially at a different phase within that particular journey. Some might be 15 years in, others 30 in, and others just starting out. And I'm intrigued just to get your thoughts as well on, how we not only make sure that we get the foundation right and fundamentals in place, but how we ensure that the necessary investor education continues to evolve as investors also become a lot more mature and smarter, and maybe, move from passive options into other options, different asset classes, understanding their risk profile and the risk dynamics that exist when it comes to different asset classes as well. And even just understanding the market dynamics. And I believe there are a few examples as well that exist out there. If you look at MTN's Gugulethu and the return on that particular investment, not favorable in comparison to other BE schemes, but again, a dynamic of the markets.
A dynamic of the market. And that is it's a legitimate fear. That to the question, can I lose money? The answer is yes. You can lose money. The trick is that we can manage that risk, and we can almost, I don't want to say we can make it 100% gone, because something somewhere will come out of the woodwork and prove me wrong.
In the world we live in right now, yes.
Yes. But we can reduce that risk to making it almost insignificant. But I like your point around it's a dynamic market. Things are happening all the time. So, actively managed certificates. And now I'm throwing jargon, which is a part of the problem of our industry. Far too much jargon. But it doesn't matter what they are, but they arrived in the market some 2 years ago. They were a great innovation. They didn't exist before 2023. Yeah. There's constantly things happening and changing, and new products and opportunities and services coming through into the market, which means that someone who thought they knew it all, or perhaps did know it all in 2005, is really left behind, and you've got to keep on to the learning. And that comes to the point. This is not something that you kind of sit down and you read the books and you say to yourself, cool, I'm smart, I know it all. Yeah. It is that ongoing. And to be clear, I'm constantly learning. Yeah, I'm not sitting here and saying I'm on top of the hill and I know it all. I know that there's stuff out there I don't know yet. I don't know what it is, but I hope to one day discover it. And it is that constant sort of passion. And for me, markets are a passion. Investing is my passion. It absolutely is. It doesn't need to be for everyone. I look at my sister, my wife. For them, it is. When I start talking, I've stopped talking because their eyes roll back. But they still can do it without being passionate about it. They just got the monthly debit order into retirement product. They got a monthly debit order into a tax-free. They're not super clued up, but they were clued up enough to say to me, hey, what should I do here? And I said that, and this, and now they're off to the races.
Exactly. Find the right people that you can trust. Build a sense of curiosity where you can, and just keep to the discipline, right, over the long term. Even if you're not overly passionate about dividend yields and price earnings ratios and net asset values. There we go again with the technical jargon. But what you've also highlighted is the importance of that education and putting yourself in those particular spaces. Yes, it's one thing to find the information online or through various platforms, but also get yourself involved. And what we have found is that the JSE, not only through its schools challenge, but also through the JSE She Invests initiative, which typically happens every August, is also another way within which we are finding new opportunities for not only younger generations, but different genders also to come on board and actively start investing. I'm so intrigued, as to how you've witnessed this evolution, not only more women getting involved, but how it's played a significant role in shifting the outcomes of socioeconomic dynamics in the country.
So I'm going to start with gender first and women. And again, this is not a stat unique to South Africa. Women typically save less and more conservatively.
Yeah.
We know why. They earn less, hence, and they are, as a breadwinner, if they're the sole breadwinner in the family, if it's a single parent household, more commitment, and they are more conservative in their investing, and that's truthfully not a bad thing. But it is what we have seen. And I will go back to the early 2000s. I was doing a presentation in this very building, started doing some Saturday half-day events.
Yes.
And my audience would be, I'd have 100 people, and it would be 98 white men and then maybe an Indian or a black man. There was no woman. It was 100% men. It was awkward. Gugu, it was awkward. I mean, it was just weird standing up there and looking down at and that has fundamentally shifted. I now look at the people who are, listening to my podcasts and coming to my events and engaging me, etc. And it is reflecting, certainly from a racial perspective, it reflects the race of our country, which is exactly what you want. From a gender perspective, it's not yet at the 50-50, but it is moving in the right direction. And that is so hugely important. And, I get the emails and the social media requests regularly from women who say, I'm not sure, I think this. And typically what I find when it's a woman contacting me, they've done a whole lot of research, and what they're looking for more than anything is affirmation. I think I should be opening a retirement fund here, or I think I should do a debit order onto this ETF. Am I right? And the answer is 99 times out of 100, yes, you're right. And that makes perfect sense, because it's an area to which you don't have the expertise. It's an area to which you could make a mistake and it could be costly.
Right.
And you're just not sure where to get that sort of confirmation, in a sense. And whereas when I get the emails from the men, it's like, well, I've bought 600 tons of Bitcoin and now I don't know what, it's the risk profiles are completely different. So we are seeing significant shifts there, and that's hugely important.
Yeah.
Absolutely hugely important. In terms of youth, yes. I mean, so the schools challenge existed back when I was at school. We didn't have it, and I don't know why. I went to a school in KZN. It wasn't available at my school.
Grew up there.
Yeah, but these days, I mean, it's plus 50,000 children. I mean, that is phenomenal. And I'm here at every the year-end awards is held here at the JSE. I've been coming since 2007. They give me 8 or 10 minutes to do a quick speech.
Beautiful.
And the excitement from the kids and the knowledge that they've got. And I talk around around the responsibility of knowledge, which is in the sharing of it. But it's also, I remember the one kid saying to me, but I don't have much money. Like I don't have, and I'm like, that's fine. Whatever you got, like save a little bit of it. But what you have is the knowledge which no one can take away from you. I was very fortunate to have a grandfather who could help me. Most people are not. The school's challenge is, in a sense, their grandfathers sort of assisting them and saying to them, and kind of throwing them in the deep end when that you're given a pile of monopoly money, fictitious money, and told to go and invest. But it's risk-free, because the worst that happens is you look a little silly in front of your friends. I mean, there's worse things out there. But you learn stuff and you make mistakes. And you, I think it was Einstein who said, experience is just, adding up all the mistakes that you've made over the years.
Right.
And you make those mistakes and you correct for it and you do the challenge for a year or two, and then maybe you do it when you get to varsity. And that knowledge, it's yours forever. And maybe you don't have the money now, but then in a little bit of time, you get your first job and you're thinking, I've got so much money. Hang on, remember the challenge.
Precisely.
It's that. It's planting those seeds, which is, why I think it would be so great if we had it as part of our curriculum.
Yeah.
But, 50,000+ children in a year going through the schools challenge is a phenomenal achievement. And I really do think, I think it has a direct impact into our country and our economy.
Yeah.
Because these children have got the knowledge. And what's super important, they've got the time. They're youngins. They're in their teens.
Right.
They may be in their 20s. I'm a little older than that. I don't have so much time.
The runway and the leeway to actually make sure that there's a compounding effect on the wealth that they're able to generate and the dividends too. What I love about what you've explained here, Simon, is that number one, knowledge is key. Once you've got the knowledge, it's yours. It doesn't expire. All you need to do is just keep evolving with the updates and the shifts and the changes that might take place in the industry. And then, I guess, implement it, because the more time you have, that's where the benefit really of long-term investing comes in. What I do want us to also emphasize, so often when people think investment and wealth, some people actually think, well, why are we creating this obsession with money? And I'm a firm believer that money might not buy happiness, but it gives you options.
Yes.
And options are what you want in order to live a life filled with the flexibility and the freedom and the quality that you'd like to enjoy. So I'm just keen for us, perhaps in helping everyone understand how to go about this journey of investing and teaching younger generations to invest, different races and genders to get involved is, you'll win some, but you also might lose some. But all is not lost either, because for as long as you do have an investment strategy, you've got patient capital and you're aware of the market dynamics, that you can ride out those waves. We tend to think that up is the only direction that exists when it comes to the markets.
Yeah, and look, and let's quickly touch on that, because markets will sometimes go down, sometimes aggressively, sometimes painfully, sometimes I'm left just in absolute shock at what's happened on a particular day in the market. My advice to the average person out there is then stop looking. Because really what happens in the market today. So I mean, my first share purchase was a week or 10 days before the crash of 1987.
Oh boy.
I tried to sell my shares on that day. I was at school. I got home from school, heard there was a market crash, tried to phone my broker. He didn't want to take my call. I had 121 Rand in the market. He had clients with real money.
But either way, you would have locked in your losses too. So a lesson in behavior and panic there.
I didn't sell it. And when I did sell it many 15 odd years later, it had been a phenomenal investment. My fear knee-jerk response was absolutely wrong. And it was something that took me some time to learn, but that markets go down sometimes, and sometimes they crash, and sometimes they go down for protracted periods. But in the history of markets, they've always gone back up. And as long as we don't panic, as long as we remind ourselves that this is, and I love your phrase, it's that patient capital. We're not rushing here. This is a leisurely Sunday afternoon endeavor that we're doing. There's no time pressures. Leave it to itself, it will happen. And I think the other thing as well, which is important, is, in the olden days, when I opened my first brokerage account, I didn't realize, you needed, I think it was 10,000 Rand. Now, to be clear, this was the 1980s.
As a minimum.
That was what you needed to open an account. Now, my grandfather pulled strings with his broker. I was privileged. I appreciate that. These days, you can get away with 100 Rand. You really, really can. So, and for some people out there, 100 Rand is a significant amount of money. But if you've got 100 Rand, you can dip your toe in the water and you can try it. And you can say, well, I know, let me buy a share, or maybe let me buy an ETF, an exchange traded fund, or whatever it is. Let me buy it and kind of see what happens. See it going up and down.
Yes.
See that dividend, which is your share of the profits, come into the account and get that absolute thrill of, I did nothing and someone sent me money. I mean, my first dividend check was less than R1. It was literally less than
Was it
R1.
a physical check though?
It was also a physical check, of course it
even
was.
better, more pleasurable.
Unfortunately, I deposited it because I would love to still have it. But it was a physical check and I went to the bank and put it into my savings account. And I just remember being completely struck by the fact, and this was now into the 90s, I left school, completely struck by the fact that someone had sent me money for, I hadn't done anything except I bought the company whenever it was.
Yeah.
And I remember telling my friends who were all the same age, so we all, I don't know, early mid-20s, and none of them, they just thought this was something dodge. They thought Simon was a funny oak from Durban and maybe, but it was that power of it. And we can do it with small amounts. We see the tweets that come out in the social medias, a dividend payment of, R1.20, and then someone's mocking it. Nonsense. That is a dividend payment. That is your share of the profits, and it's something to be proud of and to take cognizant of and say, I did this and I can carry on doing it.
Exactly. Because over the long term, it just multiplies, it compounds, which is the eighth wonder of the world. And I think we've emphasized that in terms of, patient capital and staying it in for the long term and riding out those waves and not necessarily reacting to our behavior. Simon, something that's really critical that you mentioned is, for anyone who's starting out in the investment game, just to give themselves a little bit of exposure to what it is that they're trying to invest in. So you don't have to go in with all your money, but just try to get a better understanding. And in light of the fact that the JSE's investment challenge, well over 50 years in the running now, also has a virtual trading game. I understand that this gives anyone an opportunity just to learn more without necessarily putting money on the line.
Absolutely, Gugu. It's that dipping your toe in without dipping your toe in because there's no money. Now, to be clear, because there's no money, it does have a different psychology in your brain.
Okay.
I get that 100%, but it's still an invaluable way to, again, just experience the dynamics of a market. Yeah, you made the point that markets don't always go up. They do over the long term, but not in the short term. And to buy something and watch it go horribly wrong is not fun. It's a learning exercise. It's a lot better if you didn't have any money in there as well, which is where the benefit of that comes. Now, of course, you might win the virtual trading game, and that's going to be great, but there's a ton you can learn from it. And I know some folks who've done it more than once. They come back again. They want to try different strategies. They tried something last time and it didn't quite work. They want to tweak this and that. So it's almost for them like a testing space. For some people, it is the first time they've encountered a stock market and shares, and they're just not quite sure how this all works. And that gives them a sense of that. It helps them understand what a dividend is, because one day they get a message and they say, you've got a dividend. And well, Google, what was a dividend? Why did I get this? It's that sort of thing. And it's painless because there's no money involved.
Yeah.
So you're learning, you're giving up on time, sure, but you're learning without putting that cash at risk. I had someone come to me once, had a giant pile of money, wanted to invest DIY all into the market. Ooh. And I'm like, take a tiny slice and start with that. Yeah. I think something like a virtual trading game is excellent for anyone at any age. If you're starting with it, it's the place to start because you're not at any risk. And to be clear, I can make mistakes after decades in the market. You're going to make a lot more when you're only weeks into the market. And it's kind of like a safe place to make those mistakes and to learn at the same time.
Definitely. Almost sounds like the practice round before getting into the practical of actually putting your money on the line. But what I appreciate is that you mentioned that you can learn different strategies and learn more technicalities from that. And maybe just elaborate on how that does work to enhance the level of the investor's education.
Yeah, and different strategies would be, you might, for example, think to yourself, well, I want to have a way where I can generate income from the market for whatever. Maybe you take that income and you're saving towards a car or a house, or you're in retirement and you need it to live. Maybe you just want to, have bigger holidays, whatever it is. And you can go and say, well, let's look at an income strategy. Let's understand how these dividends do work. What are REITs, real estate investment trusts? What are high dividend income stocks, bonds that are on the market that you can trade, etc. So it gives you that flexibility there as well. And you can try it again without that risk process. But it's the beauty of investing is that we could put any number of people into a room and they could all have different needs, different starting points, different knowledge levels, different outcomes, and the market can accommodate all of them. Investing is not you have to do it this way and there's no other. It allows each of us to be unique, and we are unique in the sense that we have, some have families, some have empty nesters, whatever it might be.
Some have shoe fetishes.
it will accompany whoever you are and accommodate that, and that's hugely powerful. And then being able to try it and test it. Yeah, and I use the analogy when you learn. For some reason, I just can't. I remember when I learned to swim, probably because it was a quite traumatic experience for me, although I love the ocean. But, to be quite clear, we started in the paddling pool, which was the right place to start, as opposed to the deep end, which is the wrong place to start. And there's no, some people are like, oh, the paddling pool's not for me, the virtual. No, start where it's safe. Start with those, the safe space and work your way to the deep end, or in the case of a virtual trading game, to a real market with real shares and real money.
So before you go and cycle Tour de France, start off with those training wheels and then find your way.
Exactly.
Something else that I think is crucial for us to touch on is not being swayed by what other people are doing, because that also typically happens. I can imagine you often get asked questions about new asset classes. When Bitcoin first came on board, everybody wanted to own some kind of cryptocurrency. And then you realize you need to manage the wallet and don't forget your code and PINs as well to get access to the platform. And now SARS is also taxing it. So should you actually withdraw and use it for transactional purposes, there are consequences there. So I guess comparisons in terms of your journey and understanding how to take a look at any shifts or changes in regulation and how they might impact you and your investment.
Yeah. So I want to start with the new exciting fads that come out. Bitcoin, one of them, artificial intelligence, the one that we're currently experiencing. There will be others, and some of these will fade and new ones will rise. This is just a function of the market. I think the key point is we don't have to be involved in every one.
Yeah.
We absolutely don't. And I was having this conversation with some folks a few weeks ago, particularly around artificial intelligence. And the point I made to them, and I go back now to the 1990s when the internet was just coming through. We had the .com boom in the US. And, if you were a listed company, if you just added .com to your company name, you went up in value. And if you had a website, you went up in value. And there was a fear of missing out on this internet boom. At Gugu, we sit here now and the internet is ubiquitous. It is everywhere.
Yeah.
It's been used by absolutely everyone, and any company you invest in now has varying degrees of internet, from a website presence to point of sales to everything in between. And it's going to be the same with artificial intelligence. You don't have to be on the cutting edge and find the next NVIDIA or whatever it's going to be. You don't need to. In a sense, if it's a proper trend and it's a sustainable trend, it will come to you. It will find its way into your portfolio. That's not to say that you shouldn't take, maybe you're interested in this and you want to do some research and you find something in artificial intelligence or crypto or whatever it might be, and put some money into it. Be careful with how much, because there are a lot of other big trends that have come and gone in the last, since forever and a day. We can go back to the tulips. And for folks who don't know, tulips at one point, 500 years ago, were worth more than a house in Amsterdam.
Oh, wow.
And they're not anymore. There are going to be these trends. Some will sustain, some won't. I don't mind missing them because they come to me. Sometimes I will get involved, but I do so with small amounts.
Yeah.
Because you don't know which are the true ones or not. We've seen it around healthcare and the whole idea that biotech is going to, and, ahead of the pandemic and the years leading up to the pandemic, this was the hottest sector in the US. Now no one mentions it. All those companies are fractions of what they were, and we have all moved on to artificial intelligence.
Exactly.
And it's the new buzz. Don't be swayed. It's your hard-earned money.
Yeah.
do with it as you wish. And if you do want to try something, that's fine. Just do it with a little bit. It's that, how do we reduce risk in a portfolio? We don't go all into any one thing. We diversify. Warren Buffett says the only free lunch in the market is but diversifying, so that if you do have something and it goes wrong, you've got lots else to make up for that one misstep. Because to be clear, we're going to make missteps along the way.
Yeah.
We're not going to get to the end of this journey, get to retirement and say, I never erred. I mean, maybe some people do, but they are the few and far between.
100%. I just love the wealth of knowledge that you have, because you've given us such, articulate details as to how to monitor the markets and, of course, just be mindful about our own behavior. But Simon, given the journey that we're on, we've advised, or rather suggested, that financial literacy is really critical, expanding on your knowledge base and, of course, participating in avenues, events, platforms that offer that opportunity just for you to build up on your knowledge, and the importance of actually starting young, just to ensure that you extend your level of runway to invest for the long term and really compound the growth efforts. Many of us might be sitting here thinking, okay, well, where do I go? Do I have a conversation around the braai, the boardroom, the school drop-off, or perhaps just the football when I do watch it? But where should we go for anyone who might be watching, regardless of where they are on their journey, to enhance our level of understanding when it comes to the markets and investing really as a journey?
So I think there are a couple of places. Some people might have financial advisors, someone who's helping them with investment products, whether that be retirement products and the like. And there's a place to start, because you can do more than just that. You can have what we would call a discretionary portfolio, which you then manage. You can certainly ring up any one of many experts out there and go and engage them. But if you're looking at the more sort of DIY type of environment, it really is a case. I mean, it's simple things. Listen to your show every evening, and I say that sincerely. I grew up listening to, it must have been Alec Hogg in the 90s.
Yeah.
He was on SAFM. Yeah. And I would listen to his show. Before that, there was a Richard Kluver wrote an article in the Sunday Tribune every Sunday. And I would devour the 500 or 600 words that he read. And he would talk around stocks, and I would go and go and do research. I mean, it's the 90s was a little bit different. We didn't even really have internet. But go and find those avenues and start and then you're going to hear something that doesn't make sense to you. And that's where you then go and maybe there's someone at your work or your place of worship, or someone who you think they might know something about this, and strike a conversation. Or do a search, or go find it. There's a plethora of books out there that we can read, from the overly complicated to fun ones like One Up on Wall Street from Peter Lynch, which is just a sort of a fun romp through his thinking from the 80s around how to think about investing. The information's out there, and don't be stressed that you've got to do it now. And it comes back to, this is a journey we do for our lifetime. I would also say that when you're starting and you're wondering where to start, is to keep it simple, to start with ETFs. An ETF is a basket of shares. You buy one ETF, depending which one you've bought, you've got anywhere between 10 and 10,000 different shares in there. So it fundamentally reduces the risk. Don't go into the deep end and start with some crypto coin no one's ever heard of. Start with the really,
what
really
was that
simple
trend as well that we had a few years ago, where you'd buy like
NFTs. I was talking about
I nearly got into that. Good thing I did it.
And to be clear, so did I. And to be very clear to the listeners and viewers out there, you and I are not the novices here.
Yeah.
And we nearly got, with respect, caught, because your NFT is now worthless. I remember, So, and ask the questions. And then I said earlier, in the sense of, if you've got the knowledge, let folks know that you've got them. You're welcome to questions. You can't lead a horse, can't make a horse drink. There's probably somebody in your circle who knows a bit more than you, and ask them a question or two, or go on to, there are groups on social media. Again, check out the group. Some of them are, the day traders. If they haven't done 10 trades by lunchtime, then their day's a failure. And you don't want to get into that one.
That's a whole different story, right? And that's not investing, actually.
That's not investing, to be very clear. What is important is you got to find it within your comfort zone. And maybe that's, you need to learn at your comfort zone. You need to invest within your comfort zone. Don't Don't do what doesn't make sense to you. Don't do what isn't comfortable for you. Because, to your point earlier around money, it doesn't buy happiness, it buys optionality. There's no point in having that, but being stressed or unhappy or something like that. Stay within your comfort. And this isn't a sprint. This is a marathon that makes the comrades look boring.
Precisely. So whether you're 15, 35, 55, or 85, ultimately it's a journey for everyone. I've thoroughly enjoyed this conversation with you today, Simon. And I think for anyone who has participated in the JSE Schools Challenge or might be a little bit more mature in order to do so, as you've mentioned, the platforms and the options are available and there for us to actually actively participate in. So long may this journey last, and most importantly, may it be profitable.
Absolutely. And given time, it certainly should be. Best of luck to everyone.
Definitely. Well, that brings us to the end of this particular podcast conversation. Geesh, yeah, we all just sat, listened, learned, and gained a great level of knowledge and insight, right? By going back to the fundamentals of understanding why financial literacy is important. Everything that goes back to the B word, budgeting. How you save, what it is that you use and how you manage your expenses, but of course also understanding how investing over the long term does play a critical role in your overall realm of financial literacy. The information is out there. Make sure that you participate in the journey. Expose yourself to what you might be familiar with and are comfortable with. Not all of us might be fanatic about the markets, but if you're just someone who's looking out for some consistent level of growth and income that you can earn over the long term, ultimately investment and an understanding of our investment strategies is something that's critical for all. A big thank you to my guest who's joined us today, Simon Brown, founder of Just One Lap. And as you've heard, you can find him on many of his platforms as well to enhance your level of growth and understanding of the markets. But get in touch, share your thoughts, your comments, and your feedback. I can't wait to hear from you. If this is your first time hearing about your investment journey, or maybe you're just gaining some more knowledge and spreading that messaging on with many other people, share your comments with us below. Tell us what you've learned, what's new, what's exciting, and how you hope to take it forward. That brings us to the end of this episode of the JSE Investor Avenue podcast series.